So our view was the 20,000 last month does not make sense. Above 300,000 is not right either. The 3-month moving average, 186,000, that feels about right. And then if you look at the other early indicators of the labor market for the month, claims were strong. The ISM survey measures were strong for the employment series. Even within consumer confidence measures, still consumers confident about the labor market. So it seems like the labor market is still coming along in a very solid pace, and I think today's report is going to show that.
We'll get to Jim. Jim's higher than you, actually. But how about wage gains?
So wages, we're looking for 0.3% month over month, which is 3.4% year over year. So, and that's actually one area that I'm becoming more and more convinced that we will see a real trend higher in wages throughout the year. Because we're seeing broad-based wage growth. It's not just in certain sectors. You're now seeing across the board. So the higher paid sectors are seeing wage growth still. The lower paid now are as well. So retail, trade, leisure and hospitality, and then in the middle, construction, business services, with the exception of the goods-oriented parts of the labor market, which have global forces and technology, wages are picking up. And I think it should continue.
Jim, you're at 200, basically?
Yeah, that's the number. I mean, certainly, I think there's upside risk here. I mean, the trend obviously is a lot better than last month. I mean, that's the message, as Michelle says, from claims and the ISM numbers. But, I mean, if anything, I think there's a potential for the March number to be above trend. I think the February number overshot on the low side in level terms, not just as payback for January because of weather effects.
I saw the president tweeted about how great the economy was yesterday, Andrew.
I saw that.
Despite the Fed.
Despite the Fed, but people said, oh, it's going to be a good job.
Joe, do you mind if we get these
you think that he was front running?
No.
The numbers.
I saw people like other people were saying that he was front running and needs to go to jail. Go ahead.
Yeah, Jim, tell me where you are on growth and what this number is going to tell us about it. You're part of our rapid update. Both Michelle and Jim are part of our CNBC rapid update. Thank you very much. And we're averaging 1.5. Where were you relative to that trade, Jim? For the first quarter.
For Q1, for Q1, 1.5 as well. I mean, obviously, if anything, the numbers were adding up even weaker than that a few weeks ago, but they've been coming back the last couple of weeks. I mean, there's a lot of data still to come. I think whatever Q1 is, Q2 should be better. I mean, I think the trend in growth probably still has a 2-handle here, but Q1 may well be weaker than that.
What about for the full year, Jim?
Basically a 2-ish, 2.2, Q4, Q4, which
like
is a slowing. I mean, obviously last year was 3%. So, I mean, there are reasons to think that growth is slowing here. But again, the broad message is that there's not a collapse.
So, Michelle, the joke would be, are you Orthodox, Reform, or Conservative 2-ish?
So Jim and I actually are in very much agreement. We're at 2.2% also for the year, which is strange. So we have pretty much spot on forecasts. When you think about Q1, I have a hard time with the tracking for Q1 because we know that there's going to be seasonal distortions again. At least we think there should be.
And are people forecasting the distortion?
Yeah, which is hard to do, though, because the BEA did make methodology changes.
They did, and we don't know if it's right.
The distortion different than last year's distortion. So my view is that Q1 is probably going to come in at 1-handle. We're tracking a little bit above. We're tracking close to 2%, but I think it's going to end up coming softer, and then you get a nice pop-up in Q2. And for Q2, the numbers that I think are most important to look for is March retail sales are going to be so important, whether or not the consumer has a rebound. Auto sales for March were strong. And then I think the housing data is going to be really important because we had a big drop in mortgage rates.
And here come these applications back in. And
it's coming up, right? So I think you're going to start to see that in housing turnover pick up, renovations pick up.
Imagine if housing saves the economy.
Right?